Welcome back, ladies and gentlemen. He's got his voice. Man, I sounded like dog last week. I just couldn't do it, man. It was just absolutely horrible. And this flu that's going around in the UK, it's just taking everyone by storm, man. But welcome back, ladies and gentlemen. It's been a while. I've missed you all. Yes, I've missed shouting and screaming at you all about vectors and the US economy and the labor market. What's going on? So we're going to dive into that very shortly to break down what it means now for the story of interest rates, because it hasn't really done too much. Goldman Sachs has just come out saying, yeah, the labor market is a little bit sluggish, but nothing to be too concerned about. They even said that this AI story being a bubble is actually not a bubble. This time it's different. Well, good afternoon. Yes, good morning. Yes, what is good? What is happening? Listen, I still got a bit of a throat or a dog throat, but you know what? Let's just roll with it. Yeah, I didn't have no vaccine. No, I didn't. I just had a bit of a flu. That's it, man. What is good? Welcome back. No, I'm all good, man. I'm all good. So I might actually have a few instances, but never mind. It's all good, man. It's all happening. So I hope you're all well. I hope you've had a good weekend without me. But more importantly, let's just break down what we can expect, because Bitcoin's been a bit of a pain in the backside. It's been moving up and down. We're hearing about a super cycle. X is starting to try and get as many people optimistic as possible. But what we're going to do today is just going to break down the narrative of understanding why this week is a very big week, man. Any good news that comes out is really going to be challenging whether or not the number of investors, hedge funds, investment banks are tied up in the carry. This week is going to reveal that, ladies and gentlemen. This is the last and final full trading week before Christmas and the New Year. So if there's going to be some readjustments in portfolios across the board, this is the week that they're going to do it. Will price action be good? Who knows? Will it be treacherous? Most definitely, because we're all relying on the idea that the Fed has to give us something or make us see that they're going to give us rate cuts going into 2026. Of course, the FOMC last week was somewhat hawkish. They come in across with a 25 basis point cut there, 25 basis point here. I mean, Donald Trump only a couple of days ago said that once he gets the new boy in town, Hassan or Walsh, then we're looking for a 1 whole percentage cut. Do you understand how bad that would be if they do cut the rates so aggressively in one instance? It's going to start making investors think, hold on a second, man. You can't really be doing that. Yes, granted, the labor market itself is giving us an idea that the economy is starting to be somewhat sluggish. But does it really grant the idea of actually cutting so aggressively? And are we going to be focusing on the inflationary target of 2%, which is the dual mandated purpose of the Federal Reserve? That's what they care about. The dual mandated target is the dual mandate this, the dual mandate that. It's an interesting thing, but let's just break it all down. Mad love and respect for you guys passing through. What is it? Why are you blue in the face? Why am I blue in the face? Am I blue in the face? Maybe because I've got a screen over here that's showing something blue. But anyways, let's roll with the program, ladies and gentlemen. Let's break it all down. So here we go. So main titles are coming out on the anchors saying that stocks, bonds fluctuate after US jobs report. Now, listen, when you see these titles coming out, this is how, in order for you to really understand how to read news anchors, whether they are coming out with truth or not, how you read this information, when you take the key words, it's going to give you an understanding of what's going on in the marketplace. I can look at this and say, okay, well, I can assume where we are with the bonds market and where we are with stocks. When they say stocks and bonds fluctuate, I mean, this is just a basic level, but they're just saying to you that there's not really been that much conviction. If there was a conviction in behind the actual data that's just been released, which would suggest that we're going to get rate cuts, this would reveal a different story. And then you can use this information and say, okay, what could the sentiment be when I go into my trading and understand what is the bigger picture of things? What is everybody looking at? Most of the big boys don't pay attention to this information. All we can do is make the assumption that this is a summary of the bigger picture. So we take this and say, okay, let me do some more due diligence. Going into it, it does say that signs that the jobs market is sluggish, but not rapidly deteriorating, did little to alter Wall Street's bets on further Federal Reserve rate cuts. And that's what led to stocks and bonds fluctuating. If we don't have a severe problem in the labor market, then the Federal Reserve is going to turn around and say, hold on a second, man, hold on. Why should we cut? We've still got a problem with inflation. We've got Trump that wants to cut income tax, and he's going to try and do that by incorporating the idea of tariffs. We've got trade deals coming in and out. I mean, we've got something about Donald Trump and Japan trying to do a $500 billion, $500 billion deal that's going to try and get things moving. But again, we've still got the problem of inflation. Wages are rising. So that does give us the idea that more people are going to want to go out and seek work. Okay? Now, we've got this other story about AI taking people's work away, but I don't think that's going to be the case, because if Donald Trump is trying to achieve the America that he wants, he's going to want everything to be made in America. And he certainly isn't going to want to encourage just AI to do that. He's not exactly going to be a great president if he's sacking everyone off and replacing them all with AI. So going into it, you can see here, it says, following the latest payroll readings, equities wavered in early hours. Trading with treasuries and the dollar was also subdued as investors continued to bet a weakening labor market will pave the way for more rate cuts in the coming months. This is the problem that we've got. If we have a weakening economy, then investors aren't going to be going into the stock market. They're going to be thinking, hold on a second, man. If our economy is really doing bad, why am I going to go and get invested in overvalued stocks? Doesn't make sense. Now, just quickly paving the marketplace, have a look at where we are. We've got the NASDAQ doing relatively well. I mean, we didn't really have that much of a big move on non-farm payrolls. We need data, and this is all we got. This is on a 1 minute time frame, just a burp in the chart. I mean, let's just go to the 1 hour chart, just understand where we are. Look at that. It's just treacherous. We got a massive gap up in the opening of Tuesday's market. And of course, NASDAQ hasn't done anything. And it just shows you that the market itself is not reacting the way investors would have anticipated, given that the data that's been released, it says here, let me just refresh this up for you all just to break it down. It says here that we have got core retail sales came in higher at 0.4%. That's an inflationary problem. But of course, we've got to take into consideration where we are cyclically. So if there's a change in the way people behave over certain periods of the year, like Christmas, then we can assume that retail sales are going to start coming in a little bit higher. Goes in to say also that a non-farm employment change was up from 51,000 to 64K. That's still not that much, but it does show the sluggish end sentiment from investors. Going on top of that, retail sales month on month was 0. It didn't really come in changed at all, but it's actually lower, but they expected an increase of 0.1. And then, of course, the unemployment rate came in at 4.6%, way more than what they had anticipated. So that's where we're getting the idea of the fact that the labor market data itself is somewhat sluggish. But what about inflation? Going into the calendar, you can see this week we do have, or tomorrow, later on, in the next, in the next 25 minutes or so, we've got the flash manufacturing PMI data being released. Now, what's so important about the flash manufacturing and the services data being released? Well, that's going to tell us whether the labor market truly is going to have a problem in the future, and or if inflation is going to be an issue, and are we going to get the rate cuts? Quickly breaking it down, you can see here, nothing's really changed in terms of the bets. Here we go. So going into the next FOMC meeting in 40 days' time, this has come in and shown a bets at 75% that they are expecting the rates to stay at 3.5, 3.75. So we know that the yield on the dollar is going to be released, is going to actually come in lower, okay? Then we go in at March, and we can see they're mixed, neither here nor there, between spot 3.325 and spot 350, and then of course 3.5 and 3.75 are the rates. So you can see there's nothing. This data hasn't given the market really anything. So that's why you're getting a bit of a sluggish tone. However, is the market preparing for something else? Going into the rest of the week, we have the main refinancing rate for the euro. The expectation that they're going to keep the rates at 2.15% because the inflation in the eurozone has ticked up a little bit more than what they expected year on year. However, Friday, ladies and gentlemen, let's just zoom into this and have a look at what's going on Friday. On Friday, we're going to get the Bank of Japan policy rate, where they are going to increase their interest rates to 0.75%. Well, what do we know? have we predicted the future? Not really. Japan have been telling us all this time they're going to increase the interest rates. Dollar yen has been climbing up so significantly to the point where it's at Forex intervention levels, which means that the yen would be forced, or Japan would be forced to buy a ton load of dollars just so they can reduce the dollar against the yen. So it makes it easier for investors to start going into the yen. But they thought of other things. What? Basically means that Japan is broke. Why? Because they need to increase their interest rates to encourage investors to start going into the yen to bring the value of their yen higher. And they can do that by increasing their rates and forcing carry traders out. Would that make sense as to why price action is not really doing its thing? If non-farm payroll solidifies the idea that maybe we are going to get more rate cuts, and we should be getting rate cuts because the economy is starting to pull back a little bit and the labor market is starting to contract. We don't really have that many jobs being offered. Look at that, 64,000. That is terrible. Yet the job openings report came in last week at 7.47 million. So it shows that there's lots of jobs available. Non-farm's not really giving us anything. And the unemployment rate's gone up. So the Fed needs to do something, but I think that the market is waiting for the carry. That's what I think's going on, ladies and gentlemen. What do you guys think? Hold on, Hassan. Hassan, here we go. Hassan is speaking, who's the contender for the actual Fed chair. And he's saying, Hassan on the Fed, we need consensus based on facts and data. Oh, okay. On Trump, he says, if Trump has a good reason and I agree, I will present it to others. Basically, ladies and gentlemen, the end of the Fed has happened. The second this dude, Hesed, steps into the Federal Reserve, that is it for the Fed. And Trump did say it last week. Like he did say that he can influence certain things. So let's just get one of our boys into the Federal Reserve and then we can start making movements. I actually believe if Donald Trump were to demand that they cut the rates, and this Hassan guy says, yeah, let's cut the rates, all right, and we cut it by 1 whole percentage point, that's going to cause chaos across the board. So I think with the carry unwind, investors do have an opportunity to get out of risk before that wild event happens. Do you understand what that does? When you cut rates so aggressively, okay, when you know full well that you really can't because inflation's still a problem and your labor market's contracting, but it's not contracting too much, you do start to make investors overseas say, hold on a sec, man, you're doing something a little bit radical. So I think we're going to wait and make sure your yields go up a little bit more. And then we can start buying your US debt, okay? Quickly going into it all so we can understand where we are with price action across the board, because that's all you guys care about. You only care about the Bitcoin up and the Bitcoin down, but you want to ask the question as to why Bitcoin would go up and why Bitcoin would go down. And the first part of this live has pretty much explained that to you. Let's go in and understand what we got. Yen. Your carry is unwinding. It's happening. You won't listen. Well, you probably do listen. Some of you do embrace the idea of the carry, but when the yen starts moving up against the US dollar, we got ourselves a bit of a problem. When the volatility index starts to base out at the lows and doesn't really continue to go down, but doesn't go up, we've got investors on the sidelines waiting for an event to potentially occur. Going over to the 10-year bonds market, the futures, they are expecting it to go down, given that it's trading negative. But if they're going down, does that mean the NASDAQ should be going up? Primarily, yes. We would assume that the NASDAQ would want to start moving up if the bond market futures are going down, because it means investors are seeking risk on assets. But is now the time for the risk on? If you've got the carry trade unwind coming into play with an increase on the rates at 0.75, the last time they increased it to 0.5, the market wet the bed. So what's it going to do at 0.75? It means it's going to cost more. Remember, at the carry trade unwind on the 5th of August last year, 2024, there was still $4.5 trillion left for the carry to unwind. That's what the assumption was. $4.5 trillion left on the carry unwind. So on the 5th of August crash, all right, they said there's $4.5 trillion left. So what was it before? Does that mean that if that $4.5 trillion didn't get offloaded, does that mean there's more to come? In other words, have they added to that? Because even though they absorbed the change in price of the actual interest rates, and of course, Warren Buffett is sat with $360 billion worth of cash. He's getting ready to jump into yen, ladies and gentlemen. When you increase interest rates, what do you generate? Yield. The US is trying to cut now. So as a savvy investor, what am I going to do? I'm going to stick around with the dollar. It's depreciating, trading below 100. So I've got no purchasing power. I may as well go over to the yen. Why? A, they're generating more of a return by holding yen. More investment is going over into the yen. You got big boys like TSMC, who is Taiwan Semiconductor Company, who have now started or currently in the process of building a fat boy factory to create data centers. So that's more money. I mean, 40% of all the money going into Japan is foreign investors. So Japan is literally just getting ready to become one of the biggest players right now and really putting it up there for the US. Not to say it will overtake the US, but a lot of money is going into the Japanese right now. And that could be the transition that takes the US stock market on a little bit of a contractionary phase to then start seeing the Japanese markets increasing in value, probably by the purpose of the actual safe haven of the yen, because investors will see that the carry unwind is coming into play, which effectively means I've got to sell my dollars and go into yen until the market stabilizes and finds that fair value at discount of what they think stocks should be priced at. Okay? Does that make sense, ladies and gentlemen? Well, yesterday I wasn't feeling so great yesterday. Oh no, what's happened here? Yeah. Anyways, that's a good point. So you start thinking, rate cuts are a signal of weakness in the economy. It's not a hidden Christmas gift to investors as Trump seems to think. It's true. Yo, BTC Bill, mad love for that, bro. Thank you very much. Tino, why would an investor wait to get out of, wait to get out of a carry trade? Why would he? Well, let's just break it down. All right. Here we go. Dollar. As it stands right now, my friend, your dollar is worth 97.6. That means anything below 100 is depreciation. It's terrible. There's no purchasing power. Okay. So as it stands right now, the dollar as a currency has lost its value. It's not doing great. Right. The yield on the dollar is coming down because they've just cut the rates. They want to cut more. Right. We know where we stand with the Bank of Japan because they're not exactly going to. They're not going to delay on this. They need to actually increase their interest rates because their yen is going into a significant area of discount and they can't sustain this. Dollar yen in itself, okay, has been taking a bit of a move to the upside. But of course, it's only, how long ago was that? It's been forming this big structure here, which is giving me a clue that this dollar yen story is getting ready to just rip. It's going to drop, okay? Because the yen as a nation itself can either buy dollars to bring this down, or they can increase their interest rates to force the rate of dollars to go down on forcing investors to exchange dollars to yen. Okay. So as an investor, I would say to myself, well, I'm either going to go over to the yen and invest my money in the yen and generate a yield on the appreciation of the currency pair, yen, to appreciate in value because they're increasing the interest rates. I can go and get myself some bonds in the Japanese to lock it in, because if you look right now, the Japanese 10-year is still up at 1.95. That is not going to move until they they increase. And when they increase their interest rates, yen traders are going to step in and buy a ton load of yen to buy the bond to lock in the yield at 1.95. Okay. But because they would have effectively increase the yield on their rates, that would have forced a lot of investors to go into the yen. The difference in the generation of purchases of yen is going to be able to sustain their purchasing, or should I say their repayments on those guys who are locking in the yield at this level. So as a question, to answer your question as an investor, why would you sell? You would have to maneuver. It's not about selling. It's about maneuvering. You've got to maneuver. So why would I, in the carry trade, why would I not go over to Bitcoin? Because Bitcoin is purchased against the US dollar. Correct. Shouldn't Bitcoin be going up against the US dollar? Yes, it should. But if there is more of a dominance in the rate of return on yield on the yen for the bigger players, that means investors will then say, well, I'm not going to go over to the US stock market because A, it's overvalued. If anything, I need to get rid of my assets in the US stock market because they've had a great run to the upside. I need to now consolidate my positions, get rid of that stock, take those dollars and convert them over to yen so I can generate a yield or a return whilst there is a depreciation cycle coming into play in the stock market. Remember, the stock market is overvalued in relation to the bonds. So the stock bond ratio says that. All we need to do is just wait until bonds are overvalued relative to the stocks. And once you see that comparison, it's happy days. You can start buying. So as an investor, your goal is to maneuver risk. If you're just tied up in US stocks right now and say to yourself, you know what? I'm going to slash 25, 30% of my portfolio and I'm going to go over to Japanese stocks. I'm going to go to Japanese ETFs because they're increasing the rates on their interest rates. That means there's going to be a higher yield to be attracted. That means money's going to move from one nation to the next for a period of time. That's why you will see the yen making a move up. That's why you will see the euro making a move up because the yield on the dollar is being cut. So I've got to go elsewhere. And that's what you're seeing here. Yen up, euro up, dollar down, pound up, Bitcoin down. You're going to see it because Bitcoin is being deemed as a high risk. Look at euro and look at Bitcoin. What is it saying to you? Who is taking on risk? Because remember, euro is also deemed as a safe haven, right? Bitcoin should be going up with the dollar. Going up against the dollar. But this is showing you that sentiment itself is saying that maybe it's too risky for me to plunk myself into Bitcoin. Have a look at where Bitcoin is in terms of the levels and orders, okay? So what we got here? Look what we got here. Now listen, even if Bitcoin were to go up today, this is not what I'm saying to you guys. Don't look at it from that perspective. Look at it from a perspective of orders of the bigger picture of things, okay? The book itself looks light as hell, so there's no volume in Bitcoin at all. Going into that order flow over here, let's just bring that over for you. What we got here, this is a spot market. What do you think they've been doing, ladies and gentlemen? They've been selling their Bitcoin. So this is the aggregated spot order book depth difference chart. They've been selling the Bitcoin, but when you look at it, they're not really selling enough, which is where you can understand that there's a limitation in terms of how much of a move to the upside Bitcoin can sustain. Look at the price action. They've been offering Bitcoin as it's been moving up, but now as it's coming down, they're still selling the Bitcoin, but it's not really being sold in massive amounts. Biggest amount here was around 40 million. The rest of it has been between 20 million. That's chump change. It's very small amounts of Bitcoin. We need to see big Bitcoin being sold. That means prices going up. Remember that. When you see the red bars, it means Bitcoin is being sold. So it only means prices are rising because they will not sell when Bitcoin drops. You sell it when it goes up. We get that, yeah? Upload a recording of you singing your favorite Taylor Swift song. No. Yes, Tino, but euro is not sustainable. It's crap. It doesn't matter. That's not the point. The point isn't, is it sustainable? You don't look at it from the perspective of what is sustainable. You look at what is available now. As an investor, listen, this is something you've got to get into your minds. Your jobs are not to predict whether the sustainability of one asset or another, or what's the longevity of it, or why do you think we have so many asset classes that are different, that give you various differences in terms of risk? Okay, if you've got a dude that doesn't want to spend a penny or a dime and he doesn't want to risk anything, you're going to introduce him to the bonds. Okay, because there's very minimal movement and it's a low risk investment. Okay, so yeah, you're going to make some money, but nothing massive. All right, you don't want to risk too much, but it's the US bonds, it's safe. But then you got the guys like, I wanted to be spending the big bucks. You know, I'm happy to like show off and what have you. He's going to go off and trade with the NASDAQ. He's going to invest in the NASDAQ so he can promote his gains. All right, but at the same time, he's not too concerned with risk because he knows that when you invest in the NASDAQ, it's a crazy environment. It goes up and it goes down, but the reward's much more higher, right? So what investors have got to try and work out is not whether something can be predicted to go elsewhere or go further up or down. Their job is to react. And as it stands right now, reaction says Everyone's going to the euro. Everyone's going to the yen. Okay? Everyone's not even going, no one's going into the bonds. Okay? No one's going into Bitcoin. No one's going into ETH. No one's going into Sol. But yeah, even if Sol were to shoot up to 140, that's not the point I'm making here. All right? What I'm trying to say to you is investors react to where the yield can be generated. And if you look at it, euro is moving up, yen is moving up, okay? And then you can see the NASDAQ, it's not really doing too well. It's just consolidating in this range. The volatility index is trading a little bit higher, meaning investors are like, okay, we might need to actually hedge ourselves right now, okay? Go over to the bad boy gold. Where is it? Look at gold. Gold's doing wonderful. Why? Because the data's given them the reason to believe that maybe the rates are going to get cut because the labor market is sluggish. Gold is moving back up. Uncertainty, gold moves up. Gold towards all-time high. I told you guys, gold's coming back. I tell you every single time. When we're in a cycle of cutting in the US, this is what gold does. Okay? And it's just making its claim. I've said 4,500 gold. I want 5,000. I think we're going to go to 6,500. And silver's going to go to $200. That's my expectation. I gave you silver at $19. It's now 63. I gave you gold at 1,700. And now it's at nearly, it's 4,000. Okay, 4,327. All right, those live streams are all the way back there, guys. Back there. You've got them all there for you. Okay, but yeah, that's what you got to understand. It's about the perception of yield. How long can I get it for? Sustainability wise, it's not the idea of, oh, let me just plan $500 million worth of euros in the bank. No, it's about where's the yield? What can I get? We're getting rate cuts in the US. Okay, get your money out, your dollars. Japan wants to increase their interest rates. Forget that. I ain't going to be tied up in dollars because everyone's going to be selling their dollars to go into the yen. I hope that makes sense to you. Here we go. Market is doing a bit of a crazy move. Let's have a look at what NASDAQ's doing. Let's have a look at NASDAQ on the depth of market. Let's get a little bit brave and excitable. Have a look at what we've got here. Okay, so this is the depth of market. I'm just watching how the market is opening. Trading at value area highs. Yeah, but we've got quite a wide value area, which is something you've got to be very, very careful of. Let's quickly go over to the NASDAQ and look at that. We've got data coming out in the next 10 minutes, guys. So that's why you're seeing this little bit of behavior, which is, of course, there we go. The flash manufacturing PMI is going to be released. That is showing an expectation of 52.0 with a bit of a decrease to 50 from 52.2. And then, of course, the flash services PMI coming out at 54.0. This right here is going to tell us the health of the economy. Are we doing good manufacturing wise and are we doing good services wise? Both showing expansion. Any reading below 50, problem. If they are still in the 50s range, expansion, but a little bit of a slowdown. And that's something we're going to see in the next 6.5 minutes. Let's just have a look at what we got with NASDAQ right now. Go to the 1 minute time frame to understand where we are. So we'll have a look at it from that perspective. Let's just have a look. So we've got the Brinks box itself, and I've got a crazy NASDAQ behavior here. Crazy NASDAQ. This is the depth of market. This is where I like to place most of my trading. And by the way, guys, you've got changes in the contract futures as well. We're currently now on the NASDAQ for March. So make sure you're adjusting your contracts, rolling your contracts over. So you've got to make sure you do. If you're a futures trader, you'll know exactly what I'm talking about. I look at this, man. Look at this wild behavior on the NASDAQ coming back into the vector candle region itself. Yeah, it's an interesting range right now. Currently, this is why it's not really a good time to take trades in this area, because you're just subject to just wild behavior. They've not even taken, they've tried to take the Asian session range, which they've done up here. They took that, they reversed away from it, tried to go to the daily open, reversed away from that as well. Got this green vector candle region down here. The market is pretty flat. It's not really giving me anything. It's currently sat at the point of control, so that's not really giving me much. Looking at Bitcoin, that's still trading at spot 88. That's decent itself. Probably see a little bit more activity coming from Solana. She's trading nicely as well. Going over to Ethereum, very choppy with Ethereum. Take your time with Ethereum, guys. Bitcoin, yeah, it's doing very well to reject the lows to mark up, but they are in a offering phase, as I said over here. They are offering price, but they're not doing it too aggressively. That's a bit of a problem. Quickly going over into the actual ETF and see the inflows, outflows. Let's have a look. So we've seen quite a bit of Bitcoin, Ethereum being taken over, moved over to Coinbase. That was 6 days ago, but 3 hours ago, we got 10, 20, 30, 47,000 ETH has been moved to Coinbase Prime. So this is where they're going to be wanting to offer and sell it on the way up, ladies and gentlemen. Let's just quickly just go back into the NASDAQ. So I just want to see if we can exploit any behavior on there, just to show you guys a little bit of a quick example of scalping. If I can see something, I'll take it. If not, then I won't. Thoughts, please. I know not financial advice, but my port for Roth is 401k. Yeah, okay. Is US equity 80%, international equity 10%, tech sector equity 5%, taxable bond 5%. Should I go more on international equity? I would probably go more on bonds, rights. Start putting, if you're going to do international equity, I would focus on Japanese in terms of that sense. Tech sector equity, you've got a good distribution there. But US equity is 80%. That is quite a bit of exposure. If I'm frank with you, look over here. You're in line with it anyway. It says here that you should have around 80 to 100% exposure of your capital in the US market. That's what this is saying right here. But you've got 6 distribution days on the NASDAQ, 3 on the S&P 500. And what you've got to take into consideration is the fact that if you look at the volume over the last few days or so, that we have got no volume above average as it's trying to make a move to the upside. It's no good. Okay. So what I'm saying to you is you could actually get a bit of a correction in US stocks, but how you distribute your weight of your portfolio, if you then start to merge it over into, let's say, real estate investment trusts, okay, or go into, load up on a few treasury bonds, load up on a few gold ETFs as well to hedge yourself on the event of assets depreciating. All right. So you generate, you move that money over there. That might mean you need to get rid of stock. Okay. Never be married to stock. Your goal as a portfolio manager is to manage the weight of loss. Okay. And as we're going into a carry trade unwind, we're going into the interest rate decrease on the dollar. So there's going to be a change. You want to be involved in gold because we're in a cycle of interest rates being cut. So how long they're going to get cut for until that neutral point is going to be the point where you say, okay, it seems like they're not going to be cutting the rates anymore. Then we need to then start slowing off on our gold purchases, for example, because we could be going into a cycle where they start increasing the interest rates. And when we start going into tightening, then of course, that's when you then start readjusting things and then coming out of gold, because then that works inversely against it. And then go into dollar yield based assets where you can generate a yield on the dollar. And then I'm talking too much basically. Anyways, but yeah, that should help you out in some way, shape or form. Crypto scam. Yeah, that's the answer right there. The money will go home, then we will see how much these Americans really are. Okay. Bitcoin at 75,070 and ETH at 1,800, 2K by the end of the event rate hike on Monday. Perhaps possible, right? Listen, price-wise, it doesn't matter. Let me give you something, right? Your job is not to predict. Your job is to react, right? Here's an example of reaction. In front of you is the depth of market, right? What can I see? I've seen that the market has reacted to the news. Is price action clean? No, it's not at all. It's NASDAQ. It's not job. It's crazy. Crack for traders. Wife with, widow maker. That's what this is, okay? But we're trading right now to the value area low. That tells me that the NASDAQ wants to go sweep lower, okay? I could take a scalp on that and go short. Here we go. Quick short right there. Can we make a bit of money? Yes, no. Here we go, down $120. Let's see if it can try and hold that. Let's go. Come on. Go down to value area low. Do you like that area? Come on. Keep going. Give me that flavor. Give me a drop down. Here we go. Keep going. I know you want to eat the low. Come on. I'm reacting, yeah? Because it started to come back down. I've got that green vector candle. Now, I've taken this trade. Am I wrong? Yeah, if I take the loss, I'm wrong, okay? But I need to wait and see. I need to react, not predict. React, all right? Seen some bids coming in there, quite big. Are they going to hold out? Can they? Are you going to try and work lower? Or are you going to give me information that you do want this range? All right, so I can see it down 200. Okay, cool. I get out of my trade. I'm wrong on that trade. Cool. So what do? I now need to react. So I need to wait. Can I see that this could be a low right now? I need to wait and see. All right. I'm not predicting. I'm reacting. Make money, lose money. This is the point. You got 20 bid there. Okay. So I might say to myself, all right, can I? Well, look at that. Look at that. What's going on? Someone said something. Oh, you're flipping out the data. Jesus Christ. I took a trade way sooner than I needed to. Okay. So flash PMI came in 52.9 and it came in flash services. Sorry, manufacturing came in at 51.8 and services came in at 52.9. So contraction, but they're still above 50. I'll trade that logic and say, okay, then we try and take a quick stab and react. The market's reacting to the downside. Let's go short. Let's see if we can make something back. Here we go. So it wants to try and work itself lower or not. Give it a second. Come on. Keep going. You just had that data. We're going to try and work lower in the value area low. We want to try and eat the liquidity lower. Can we do that? Very tricky time. Here she goes, taking a nosedive down. Here we go. Keep going. Bids are getting quite big there, but it can easily snap back up. So I've got to be careful. Keep going, NASDAQ. Keep going. Shoot down. Clear the value area low. Keep going. She's collapsing. She's collapsing. She's breaking. Come on. I've got to be careful because it can snap back up. Come on. There you go. Look at what I mean about NASDAQ. Should have took the trade. Should have done that. But this is a perfect example of what you got to be careful with the asset and trading at these times. Now I can sit down and react and hold on to the trade. I'm like, oh my God, I can hold on to my trade and what have you. But they've just come down and kissed that range. Okay, if there's interest down there, they'll go back down again and try and work the value area low. Zoom out, let's see, look left. We've got the Asian session ranges to the downside. Okay, so let's see, can we hold on to it? Are we reacting? What we do, we predicting or reacting? We're reacting. Do I need to react now? Yes, no? Is it going to come all the way back up to when you go all the way back down? It's an absolute shit show, okay? But your job is to react, all right? Your job isn't to predict, it's to react, all right? What are you doing? Look at this absolute nut job of an asset. Look at it, look at it, look at it. Took a few $100 lost there, but anyways, you get the idea. You get the idea. Yeah, we've just had the data shooting up. It's not gone anywhere because it's still stuck at the value area. Look at it. It's just, you've got to be so careful with now. That's why it's better to trade with ES. All right. Better to trade with S&P because you can take a bit of a move up. See, we go, we're working value area high. We'll try and take a long on that. See if we can exploit that. Here we go. Make a move up. Come on. Pushing up the green vector candle, trading vector candle recovery regions. Here we go. Keep going up. NASDAQ, go. Pump, pump. Pump, go up. There she goes. One more pop up. No, got back up. Fucking hell, they're being horrible to me today. They're being horrible to me today. But this is why you don't trade the first bit of the market because of this. It's basically pot luck. You've got to try and exploit that. Let's just take that. That's how I trade NASDAQ. You know, this is how you're doing it. Try and take another stab up. Here we go. I'm reacting, guys. I'm not predicting anything. I'm reacting. If there's money coming in right now, it's going to shoot up. It's going to shoot up. If it doesn't, I lose money. It doesn't matter to me, okay? Because I'm reacting. I'm aligning myself with the market, and I'm not losing tons of money either. And it can easily be recovered. I just got to wait for my time with the market to make a move in the direction that I want it to move to. So here we go. Can we go for the daily open push up? Trading a value area high. Can it do it? So something's going off there now. I can see that there's someone up there trying to stall. I've got a massive red green vector recovery point that it could send price down again. Okay. So can it do it? Or is it going to shoot up? It would look like to you, it's like gambling, but it's not. It really isn't. It's understanding order flow and taking advantage of what momentum's coming into play right now. So here we go. It's going to shoot up. There she goes. Keep marking up. Come on. Value area high. You can tell the market is light. Because this behavior is actually shocking. It's not really doing anything. Look at it. Keep going. I want the daily open. Cross the daily open. We're going to keep going. Yesterday's close up there. So someone's up there trying to plant. They keep on stopping. They keep hitting a bid. Keep hitting the offer. And it pulls it back down again. So we're going to want to assume it's going to keep trying to go. Keep going. There you go. Daily open. Take that. Come on. If it works out, I can start adding size to it. I'm only using 5 micros. So I'm not losing anything. I can absorb the behavior of it. But look, again, it's just very Look at the order flow. It's just stuck. It's not doing anything. So I have to react, not predict. I don't want to be like, oh, I want to see it go up because I've got a prediction. No. Right now, it's pulling back a little bit. It's coming back up. You can see the market is absolutely wild right now. Okay? And that's how, in my opinion, how you should be trading, ladies and gentlemen. Your goal is to react and not predict, because prediction comes with a conviction and a belief and a hope and a marry. I want to marry the trade. I marry my idea because I want to be right. Nah, man, don't think like that, ladies and gentlemen. You can see the market is very light. This is absolutely horrible. Come on, do me something. Give me something. Yeah, you're going to go back into that green vector. Wait, one more push. One more push. You want that vector, don't you? Come on. Give me the vector. Do the push. It will do it. There we go. Come on. There she goes. Up she goes. Up she goes. Come on. Make the push. Go on. There you go. That's what we were looking for. Yes, overnight high. Keep going, NASDAQ. Keep going. Keep going. Keep going. Keep going. Off you go. Come on. Make the move. Make the flipping move. Stop it. No, you're not done. Go on. You're not done yet. You're not done. You're not done. Go on. Value area high cleared right now. Come on. Ah, fuck it. Anyways, that's basically what we do. Yeah, it is. Yeah, it was off she goes. I was expecting him to do that. But that's reacting. Do you understand? I didn't predict anything. I reacted. And when you react, you are in so much more tune with the market. Because I can take a trade and be like, oh, it's going up. But then I need to react. I need to say to myself, oh my God, like, what's going on here? Do I get rid of the position? Am I right? Am I wrong? You know? So yeah, that's it. You yell at the charts. Well, yes, you have to yell at the charts. You have to. But that's it. I hope that makes sense. Anyways, mad love and respect, ladies and gentlemen. We've had the data come out. I'm going to update the platinum members. And I hope you enjoyed it. Hit the like button, subscribe on the way out, guys. NASDAQ's moving nicely. Gonna have a little gander at that. Take care of yourselves, gang. Peace.